So you and I were having a conversation the other day about market data and how it pisses us off when we get on Facebook or Instagram and see realtors or lenders getting on there and saying, "Oh, it's a great time to buy a house."
Yep.
But that's all they say.
Yep.
That's literally it.
Just a blanket statement.
Uh-huh.
It applies to everybody.
Everybody. And then the other problem is people are starting to lump realtors and mortgage lenders. They're starting to call people car salesmen.
Mm-hmm.
I've seen that a lot online.
Well, yeah.
I got a lot of hate online. I think it's just because my ugly looks, but
Can't fix everything.
can't fix everything.
I mean, you can do a lot of work with a camera, but
but they're like, I've had a lot of people comment and saying, "Oh, realtors and mortgage lenders are just used car salesmen now."
Mm-hmm.
So what did the market data tell us the other day?
Well, you just got to look at population trends. I mean, if you have more people moving to an area, and you compare that against the building permits, and you see how many housing units are getting built. If you've got a nice shortfall there, it's obvious there's going to be the demand. And that's where housing is it's a completely different duck. People need a place to live. They just can't. You can't get a cardboard box and insulate it and go live under a bridge somewhere. You have to have a place to live and raise a family.
Yeah.
More than likely.
One of the cool things that, obviously I know market data and stuff, but I'd never looked as far into it as we did the other day as far as the building permits and stuff. Mm-hmm. Like I've always known that I had a conviction that when I was saying it was a good time to buy, it was a good time to buy.
Yep.
But I'd never actually looked that far into the data.
Yep.
Like, what was it, 500 and some odd building permits for single family homes?
For single family homes.
And there's how many homes on the market right now?
God, it depends on price point.
Right.
Buckets
how many
buckets
total?
are a big deal.
How many total single family homes are there?
I want to say it was about 400, something like that total. But that's across all the price points. If you start looking under 350, there's like 100 homes.
Yeah.
Right now, at least in our particular market, we're kind of stacked up between 500 and 800,000, which there's a buyer pool for that too. But, a lot of folks out there are looking for homes underneath that price point, and they're going to battle over the same 100 homes.
Yeah.
Thousands of people.
Mm-hmm. Mm-hmm. Oh, and then how many people was it that were moving to Sioux Falls every year?
I want to say it was like 6,700.
Yeah.
Something like that.
Something like that.
Yep. And after we finished up our little conversation, we've had an interesting market dynamic here with COVID and, South Dakota State Open and all that type of stuff. So we've seen maybe a slightly higher trend, but so I went and looked at just the 10-year average, and it was still just shy of 5,000.
Really? So
even taking some of the outliers out of play, it was still, skewed heavily. We got a housing shortage. And I think, when you look at that and you start comparing what are these big companies? Where are they investing? What are they doing? What do they see coming down the pipe? And they obviously see a massive housing shortage. And that's why when we were looking at the permit data, we saw so many apartment permits getting pulled, because that's the fastest, easiest way
to build doors.
Yep. To get those people into some sort of living situation. Otherwise, it's just not there.
Interesting. Because what was it? It was maybe 1,000 building permits in 2021 for 1,000 doors for apartments, and then this year it was tripled.
Yeah, I want to say it was 2,000 something.
That was 3,800.
3,800. Yep.
Because there was only 4,170 something of inventory created in Sioux Falls or building permits.
Yeah.
And 3,200 of them were
multifamily.
Apartments.
Yeah. The single family is just so far behind demand. It's not even close. We're on the right decimal point.
No.
Yeah. God, it's gonna. I'm not, and I don't know what's gonna change about that. When you start looking at the cost of land, ain't nobody around here selling their land any cheaper.
No.
In our situation, at least in our particular market center, is our local farmers don't need to liquidate that land, and they know that they can, pass it on to their family, and they're just passing along generational wealth that's held in that land, because prices are going to continue to go up. We've been dealing with all sorts of material price increases, and lumber's been, everybody's pointing their finger at lumber and watching that cycle around there. But it just seems like every time the lumber would cycle down, then the cost of garage doors or, the caulking that you have to seal all your exterior windows, that's increased and essentially offset the cost of the lumber. And so the material price has stayed about the same. And then the last thing is labor. Sioux Falls, we're short everywhere. You drive down the road, you'll see, we need help constantly. Yeah. So I'm trying to find, an abundance of labor to try to help meet that housing demand. It's just not there. And then we have to pay really competitive wages.
And what a lot of people don't understand about lumber and how it's, how it's traded and how it's paid for was they go by bulks. So especially last year, whenever the housing market was crazy, this last 2 years, I mean, a lot of these big lumber yards, they're holding a lot of inventory that they paid premium prices for.
Yep.
They're not just going to drop their price just because their new product that they're bringing in went down.
Yeah. Yep.
They paid a certain price for that and they have a certain margin. They're going to get that margin.
They need to. And, kind of from like a consumer facing standpoint, we look at something like that and we go, well, why is it our fault that you guys bought when it's high and all that type of fun stuff? But, at the same point in time, from a consumer standpoint, if we just say, screw them, they done goofed, we're not interested in helping, we're not interested in paying your prices to keep your business floating, that has real world impact for that business and all the employees within that. And imagine if they went out of business,
or the company they work for did that.
Yeah. Well, then all that's going to do is it just goes right back to the same core problem. We need inventory. And if we have lumber yards not able to sell product and make an appropriate margin on it and keep their employees going, well, now we're out of lumber yard. We're having even a harder time meeting inventory demands. Yeah. So it's just so much more, intertwined than, people sitting back and just kind of
looking at one number.
Yeah. Pointing fingers at particular things and going, that's the problem.
So speaking of pointing fingers, I wanted to get your perspective on this, because this is something I've been hearing a lot, or, hear a lot of people talk about. Why do you think it is that people, nobody talks about the stock market and when it's going to bottom and when it's going to crash? Why do you think that people, because people don't understand it. It's complex.
Yep.
There's people that spend their entire lives, their entire careers studying the markets, and they still can't time the market.
Yep.
So why do you think people think that they can time the housing market?
Because it happened one time for their uncle 15 years ago on one stock, and he's been talking about it at Thanksgiving for 20 years now.
Yeah.
And so everybody's like, well, Uncle Frank did it with this and he made $1,500.
Yeah, but why do you think people do that with the housing market?
Oh, well, because they think it's easy to do, and it's just a simple thing. You just wait for the prices to dip. But and stocks and housing are a little bit similar in this regard, where if you're looking to try to make a quick buck, like the rest of the world is always trying to make a quick buck, those are not the places to do it. I don't know, go to the vid lot or something,
or go get a second job. I mean,
that would you'd make more money. It'd be more consistent doing that. But really, if you're looking at stocks, which again, I do know very little about, so I won't want to speak too much to that. But stocks and house and real estate, it's long term. It's always a long term play. My financial advisor always says, he's like, time in the market is better trying to time the market. He says, in the history of the stock market, and this is not exact, but something similar to this. He's like, if you were trying to pull your money out, put your money in, and you missed. There was 20 or 25 days in the history of the stock market. And if you missed one of those, or 10 of those, or 15 of those days, your portfolio is going to be just destroyed compared 100%. To what it would look like if you were just letting your mony sit.
Yeah. For example, the last 60 days, we've had 2 or 3, 4 to 5% rally days. That's a big jump. And if you have your money pulled out of the market because you're trying to time it, I mean, people dedicate there's hedge fund managers that manage billions and billions of dollars that still can't time the market.
Can't do it. You just never know. And nowadays, with just kind of the media climate that we have, somebody can jump on, CNN, and say something. The next thing you know, it has real world impacts. And who knows, it doesn't matter how skilled or how well trained you are in the market. You don't know if somebody's going to wake up on the wrong side of the bed and say something on CNN that day. Yeah. How do you know?
Yeah, exactly.
Can't predict that. And nowadays with, just social media and our news media.
Yeah, access to information.
Yeah, you can say something and you can have 900 million people see it.
And a click of a button.
Yeah. Yep. And so it's just, again, it's so much more volatile and everything happens so much faster. Trying to predict stuff, it just seems like it'd be impossible.
And it seems like a lot of people have gotten spoiled over the last 2 years too, because they could, you could buy a house and hold it for 6 months, turn around and make some damn good money on it.
Yeah.
Some really good money.
Yeah. I had some clients do that.
Yeah.
And
good for them.
And as we sold that thing and went to buy them another one, we had to have a different conversation that says, hey, we're not in Candyland anymore. Like, we really need to bear down and make sure that this is a good fit for you, because we're not going to be able to flip that again. You're going to lose money the next time around. So again, comes down to, hey, how are you feeling about your employment? What does your company do? Is your company going to continue to be relevant? Is it a necessary service that you guys perform? Okay, cool. Awesome. Well, let's move on to the next question there. Do you guys have an emergency fund set up?
Yeah.
What would it look like if, your mortgage payment increased? Like, are you guys financially secure? And then how long are you going to be in that home? We're not talking, 8 to 12 months. We're going to want you in there at minimum 2-3 years. Mm-hmm. And again, if they check those boxes, let it rip. It's a no-brainer to buy, period. But if there's any hesitation, or if you're working with a couple and you say something and you see Mr. Buyer look over at Mrs. Buyer and they look at each other like they both got 10 heads,
maybe it's not the best time.
Yeah, hey, let's pump the brakes here and let's dig into that.
I think that's a key point, because like right now there's a big generalization of everybody should buy a home.
Yep.
No, they shouldn't.
Mm-hmm.
They should not. Not everybody should buy a home. I mean,
but by market center to market center too.
And by what I'm seeing from affordability, like, I know people want to talk about, rent to 100% interest and all that crap.
Mm-hmm.
Like, I get it. I do understand what they mean by it.
Yep.
But it's somewhat misleading information, because, let's say, for example, that I'm paying $1,700 a month in rent.
Mm-hmm.
And I live in a nice apartment, and, a lot of things are cared for. If I don't have an emergency fund, that might be the best place for me right now,
mm-hmm.
because I'm not going to have any money to fix anything on a house if something goes wrong.
Yep. Yeah, I was going to say,
number two, mortgage payment. You're not going to get much around $1,700. Mm-hmm. Not anymore. Not with today's rates, today's prices. You're just not going to get much for $1,700.
Yep.
And if that's their max comfort level, and I think the generalization, I've seen a couple people, like, when they come to my office, they're like, hey, we want to buy. I know that this payment's high, but rates are going to come down. I go, I don't think that's a good idea, because if you can't afford this payment forever,
this payment
is fixed.
Yep, that's it. That's your number.
Like, we hope rates go down next year, but there is no guarantee of that.
Mm-hmm.
If that payment's comfortable, fine, you should buy. It is a good time.
Mm-hmm.
But if it's not, then you should stay where you're at.
Yep. And do you have an emergency fund set up too?
I met somebody the other day that had a 3-year lease for $1,200 a month on, like, a brand new apartment.
That's dynamite.
Like a 2-bedroom apartment.
Yeah, that's really.
I'm like, and they had a little bit of credit card debt, had some credit stuff clean up, and
mm-hmm.
I could have gotten them approved, but I said, like, you guys should stay where you're at.
Yeah.
$1,200 a month.
And dude, it's
you have really a swimming pool, a gym.
Pretty simple math equation too. Like, just take a look at that mortgage payment. Let's say it's that $1,800 a month payment, and you break down. All right, here's the principal portion of your payment. Now, what are we paying in interest? What are we paying in taxes? What are we paying in insurance? And then take a look at your equity gain year over year, and it's just simple math. Mm-hmm. You take a look at it and go, okay, well, maybe you rent, clean up some of your numbers, or maybe invest the difference or something. And it's not a bad thing to do right now.
Yeah.
Yep.
Well, and a lot of people I think a lot of people don't understand what a recession actually is. Mm-hmm. Money's been so easy to come by for the last 2 to 3 years. Like, I mean, I feel like anybody could have made a good living the last 2 or 3 years, whether you're selling something or got a second job or whatever. There's a lot of side hustles, a lot of that stuff, but I don't think people understand what actually happens in a recession, especially, 32, 33 and under.
Mm-hmm.
A lot of the people that are buying their first homes, they don't understand what a recession's like.
Yeah.
Well, like, money gets tight.
And everybody is like, everybody's chasing instant gratification. I said it earlier, like, man, buying a home, that's a long play. Mm-hmm. Like, and they look at it and they, 12 months for a 24-year-old person right now, it seems like a long, long time. Mm-hmm. 12 months when you're talking about your home appreciating and gaining equity positions is nothing. That's a drop in the bucket. 100%. And so trying to have that conversation to go, what do you see? What's your opinion of long term? Because it's kind of a subjective topic there. And so we're talking 3 years or more minimum. more the merrier. But if you call me up in 3 years to sell your home, I think we got a chance, type of deal. So
it's 2 to 3% appreciation is normal.
Yep.
Real estate is not a short-term flip. It's a long-term,
yep.
You know, and if you keep it, awesome, you're going to make money on it. If you decide to rent it out, awesome. The tenant's going to pay for your mortgage, might cash flow a little bit, but you're going to get the tax benefits and the appreciation, obviously, over a long period of time. But it's not going to be not going to be make $100,000 in a year.
No,
flipping your house.
God, no.
It was an anomaly.
Yep. Yeah, Candyland, man. People are just able to do that and get out real easy. Yep.
Cool, man. Well, I know it's time for you to go, so
I got to scoop.
I'll wrap it up, but appreciate you.
Yeah, man.
That's pretty good stuff.